Hi there, Shingirai here again with a weekly update on some of the key ideas, themes, and events that have been shaping portfolio performance over the past week. Worldwide number of coronavirus cases has breached the 5 million mark, but early in the week we saw, of course, the US company Moderna announcing that they were going through to the second stage of clinical trials for a potential vaccine. Most optimistic estimates, of course, would still put this anywhere between a 6 to 12 month period until this can be rolled out on a large scale. US-China tensions are escalating, with Senate overwhelmingly passing a bill that may bar some Chinese companies from listing on US exchanges, and of course that really brings to question on China's ability to deliver on a phase 1 trade agreement deal. UK economy would be reopening, and we're beginning to see a couple of people trickling back into the workplace, and of course this would be on a rolling basis, with not all staff being required to return to the office space at once. US jobless data came in at 2.44 million claims, and that was in line with expectations, and you would see some of the US futures equity trading pairing some losses that they had recorded earlier on the back of this jobless claim number coming in in line with the expectation of 2.4 million claims. We would see crude oil has experienced a spike, especially with WTI US crude stockpile numbers experiencing a drop, and Brent crude would be trading around $36.95 a barrel. Gold continues to be slightly weaker, but maintaining above the $1,700 per ounce mark going into today's trading. Moving on to CBAM portfolio performance, you would see that going on a quarter-to-date basis, some of the losses that we had incurred in this first quarter in the equity market particularly, which was hard hit by the coronavirus pandemic, seem to be reversing, and you would see CBAM 5 on a quarter-to-date basis would be up 12.57%, while CBAM 3, our intermediate or moderate portfolio, would be up 9.36%, meaning that on a year-to-date basis, we would see CBAM 5 down 9.45%, while CBAM 3 would be down 7.17%. Some of the key ideas and themes that we've been looking into has been trying to get some more exposure to the US mid-cap sector, and we have been doing some research into what potential ETFs we could use, with ideally leaning towards currently an S&P 400 index tracker ETF, which would of course give us exposure to more domestically focused US companies.